Americans are more confused than ever about investing. Every year, Gallup conducts a survey where they ask Americans what the best investment is. This is a multiple choice poll, so respondents have to select from a pre-made list of investments that Gallup provides. The standard choices are real estate, stocks, bonds, gold, and savings accounts. Now, if you have any knowledge whatsoever about investing, you know two of those options belong at or near the top of the list, and some of those options don't belong on the list at all. But let's take a look at what Americans think about this. First, I'd like to tell you about today's sponsor, I Trust Capital. Today, people are concerned about the purchasing power of their dollars being eroded due to inflation. They're concerned about the returns they're getting on their traditional portfolios, things like stocks and bonds. Many people want to be able to purchase investments that will preserve their purchasing power, things like gold, silver, Bitcoin, ways to store the value of your money without being exposed to the dollar. What's the problem with this? The problem is that most people have most of their wealth in their 401ks, their employer's retirement accounts. And these accounts do not allow people to buy gold, silver, or Bitcoin. Some of them allow access to ETFs that have exposure to these prices. But number one, you're introducing many layers of counterparty risk. And number two, you don't actually own the asset itself. That's where I Trust Capital comes in. I Trust Capital allows you to open up actual retirement accounts, IRAs, traditional and Roth. You can even roll over funds from a previous employer's retirement account to fund this. You can buy gold, you can buy silver, you can buy Bitcoin and even other cryptocurrencies with I Trust Capital. And if you sign up with my link in the description below, you'll get $100 worth of Bitcoin as a sign-up bonus for opening the account. Coming in last place, we have bonds, with 7% of respondents saying that bonds are the best long-term investment. Now, bonds are absolutely not the best long-term investment. Even professionals, financial advisors, the only reason they put bonds in your portfolio is to try and smooth out your returns over time. Because if you're invested in something like, they would say, stocks, which have the best return long-term, well, they're a little bit more volatile. And so if you need the funds when the stock market is down, then the bonds are there to kind of balance that out. But nobody thinks that bonds themselves are the best long-term investment, except for 7% of Americans responding to this survey that think they are. The tough thing about bonds is that they're just debt, which means you give $100, you get $100 back, plus whatever interest that debt is paying. And for the last couple of decades, interest rates have been stupid low. And only within the last couple of months or so have interest rates gotten to the point where they're actually higher than inflation. But the 7% who said bonds are the best investment are still doing better than the 13% of people who said savings accounts and CDs are the best long-term investment. Here's the thing that people don't understand about savings under a fiat standard. Savings is debt. When you put money in a bank, that bank owes you money. That's a loan you've made to the bank. You are a creditor. So savings is debt. Further than that, what the bank does with your money is they loan it out and they go create a bond. So no matter which way you cut it, if you think that savings is a good investment, then you think debt, that bonds are a good investment. The problem is that a savings account and a CD, they've got rock bottom interest rates still. At least with bonds, you're starting now to get interest rates, yields that are a little bit higher than the rate of inflation. That's not true with almost every single savings account out there. And as we've seen with all the bank failures recently, with Silicon Valley Bank and First Republic Bank and Signature Bank, there is real risk of the bank collapsing. So a savings account is return-free risk, meaning you're taking on a bunch of risks that you don't get your money back and you're not getting any return for it. So we've got 13% of Americans who think savings accounts and CDs are the best long-term investment, even though they're providing almost zero real long-term return. And 7% think that bonds are the best long-term investment. That adds up to 20%. 1/5 of all Americans think the best long-term investment are things that provide little to zero real return over the long term. That is financial illiteracy at its peak. But wait, it gets better. Let's take a look at stocks, because only 18% of respondents now think that stocks or mutual funds are the best long-term investment. Now, I'm going to provide you the absolute best rankings of all of these at the end of the video here, what the actual true order of worst to best investments is. But only 18% of people thinking stocks are the best long-term investment shows extreme financial illiteracy. The only way that anybody will ever produce real wealth long-term is equity in a business or in real estate. And most people don't have their own business to have ownership of, and so the only way they can do that is through stocks. It's also true that passively investing in the S&P 500, in my opinion, is not the best way to invest in stocks. There are much better ways to allocate your portfolio, but it doesn't mean that stocks overall, ownership in business, is a bad long-term investment. It is one of, if not the best. And with only 18% of Americans thinking that stocks are the best long-term investment, it may be an indication, somewhat of a contrarian indicator here, that stocks are near or at their bottom. But now we're getting to the good stuff, because they also ask about gold in this survey. Between 2022 and 2023, gold shot up, with 2022 showing only 15% of Americans saying that gold was the best long-term investment, whereas 2023 showed 26% of Americans thinking gold was the best long-term investment. Now, this is where I wish this survey would have been started long ago and had data going back further. But Gallup has only been measuring Americans' perceptions of the best investment since 2011. And that was at a time when euphoria for investors in gold was near an all-time high. And so it makes sense that from 2011 all the way until 2022, the amount of Americans who thought that gold was the best long-term investment would be on the decline, which means that if this is somewhat cyclical at all, then we could be seeing the early stages of the next bubble, this euphoric wave in gold, as it rises up, as more and more investors think it's the best long-term investment and pile money into it. But I need to offer a huge warning here, because just like savings, gold is not an investment. This is again financial illiteracy. Cash is not an investment, money is not an investment, savings is not an investment, and gold is not an investment. An investment is equity in a business, in a cash flow producing asset, in something that has the ability to produce wealth. Gold is a form of money. It is savings, it is reserves. And this is something that most Americans don't grasp, that there are different categories and you shouldn't be trying to gray out or blend the lines between the two. Insurance is for insurance purposes. Don't blend it or mix it with your investing. You'll get the worst of both options. Savings is for saving. It's for rainy day. It's for preserving your purchasing power. It's so that you can buy something later on when you need to buy it. It is not an investment vehicle. It's not going to make you wealthy. It's there to preserve your wealth. Gold is a form of savings. It's not an investment. So while I am happy that it looks like there are many more people who are excited about investing in gold, I don't even like to call it investing, because it's not. It's just a better way to preserve your purchasing power than something like fiat currency is. And finally, in first place, we have real estate at 34% of Americans saying real estate is the best long-term investment, and that it comes off a steep decline from 2022, when 45% of Americans said that real estate was the best long-term investment. Obviously, since 2011, the perception of real estate being a good investment has risen, 2011 being almost an all-time low following the great financial crisis. That makes sense. 2011 would have been a fantastic time for anybody to buy pretty much any real estate. And the years of 2015 through, I would say, 2019 were relatively normal in terms of real estate performance, historically speaking, and it wasn't until 2020, 2021, all the money printing that we got, some of the crazy activity in real estate. So real estate coming in at 34% for 2023 brings it back in line with the historical averages, at least from the last decade. And real estate does count as a fantastic investment here. Real estate is something that you can purchase with debt that is very cheap, that is fixed, which allows you to short the dollar, and you are able to buy it with very low money down. You get a ton of tax breaks, and it's a cash flow producing asset. But where does it lie in the true rankings? Okay, hold on. We have to talk about crypto here because I can just feel the comments wondering where in the world is crypto on this list. And don't worry, there is a version of this poll that Gallup sent out, and they asked people two versions of this. One with just real estate, gold, stock, savings, and bonds, and another where they included crypto. And as of 2023, 4% of respondents said that cryptocurrency was the best long-term investment. This was down from 8% as the ranking in 2022. So now let's compile the true list of investment rankings from absolute worst long-term investments to absolute best long-term investments and lay the ground rules. We are looking long-term here. We are not looking short-term. So while I think there is a case to be made that you have the ability for large gains in certain areas over the next couple of months, couple quarters, maybe couple of years, that's not the game that we're playing here. We're looking at the best rankings of the best investments for the long-term, 20 years or longer. Rule number 2, we are looking to maximize your total return. That's it. That's actually the only thing that matters with investing. It's the only measure that counts. When people try and smooth out the returns and diversify so that they don't lose money, what they're really trying to accomplish is maximizing their total long-term returns. By the time you need the money, I want the maximum amount of money possible at that time. Our contenders are going to be real estate, gold, stocks, savings accounts, bonds, and cryptocurrency. Coming in at absolutely last place as the worst long-term investment is going to be savings accounts and CDs. If the government has proven one thing over the last 100 years plus, it is that when it gets an opportunity to devalue its currency, it will, which means that the purchasing power of your money goes down over time. Said another way, prices go up. And if the return you're getting on whatever investment vehicle you choose does not surpass the inflation rate over the long term, then you will be losing money, not making money, which is the opposite of the stated goal of maximizing your long-term return. And the vast majority of savings accounts and CDs out there currently and for the last few decades do not pay more than the inflation rate. Therefore, savings accounts come in at the bottom of the list as the worst long-term investment because they lose you money. All right, and now coming in at 5th place in the ranking of best long-term investments, we have bonds. This is one of those that you may be able to make an argument about, hey, it could be a good idea to have some exposure to bonds short term right now if you anticipate that the Federal Reserve will be lowering rates because that will increase the value of existing bonds right now. But when we're looking at long-term returns here, we have to factor in a couple of things. Number 1, what is the yield that it's going to pay you? Number 2, what is the risk of that debt getting defaulted on? Number 3, what is the inflation rate between now and that long-term end goal? So will you have a positive real return? And after looking at all of these factors, it is very likely that you will make a very small amount, if anything, on bonds over the long term. This is because you are loaning money to an entity like corporations or more likely the United States government that is already extremely over leveraged, which means the only way they can actually pay you back the number of dollars that you owe them is to do it through inflation, which means that they're eroding the purchasing power of those dollars they're paying back to you. So even if they do pay you back 4%, 5%, what are the odds the inflation rate is going to be meaningfully lower than that? Over the next 20, 30 years, it is more likely that the inflation rate will equal or even surpass the yield you'll get on bonds. It is the only way they can actually pay back without outright defaulting. And if they do outright default, well, then you don't get your money back anyway. So still not the best investment. All right, coming in 4th place of the best long-term investments, this is going to be a controversial one, but this is the place that cryptocurrency belongs. Now, the reason why cryptocurrency belongs in 4th place here instead of somewhere else is because really, It's an unknown. It's a wild card. For the most part, most cryptocurrencies will almost certainly go to zero, and most are already there or very close. But when you factor in the total long-term return of Bitcoin from inception until today and how outstanding those returns have been, and consider what the market cap of Bitcoin must be if it does continue to grow in market cap and in adoption around the world and maybe becomes money someday, then it will absolutely continue to have a fantastic return that beats everything else long term. It's just untested. It's so new. We don't have much data to rely upon here. And so it comes in spot number 4 because it might be worth a small allocation. I put about 5% of my net worth in Bitcoin a few years ago, and it's been a great allocation for me since. But I don't think it's worth risking much more than that. Coming in at 3rd place is going to be another controversial one here, and I'm going to put gold as the 3rd best long-term investment. Looking at this chart that compares the S&P 500 to gold, with the orange line being gold, you can see over the past couple of years, the total return of the S&P 500 versus gold has flip-flopped between which one would have been the best place to put your money and which one would have been the worst place to put your money. In fact, if you would have invested in gold in 2007, you would have a 200% return on your money today versus the S&P 500 only 172%. But if you would have waited just 2 years until 2009, that would have been flipped to a 367% return in the S&P 500 and only 100% return in gold. Now you could look at this a couple of different ways. You could look at this as the overall return of the S&P 500 has been basically nothing because the real return is going to be measured against gold since that's the inflation hedge. Or you could just look at this as, hey, there are certain times when gold is undervalued and certain times when it's overvalued. And so depending on when you buy it, you may increase your purchasing power or you may decrease your purchasing power. Long term though, as a hedge against inflation, this is obviously going to perform better than bonds. It's going to be performing better than savings, and its ability to withstand currency changes, political changes, it withstand differences in culture, history, maintain its purchasing power for thousands of years. I would absolutely put all of my money in gold if I had to only pick one over crypto, savings accounts, or bonds. So we have real estate and stocks left over. Which one will take the number 2 spot and which one will take the number 1 spot as the best long-term investment vehicle? I'm probably going to make a lot of people upset here, but coming in at 2nd place is real estate. And that means that coming in 1st place is obviously going to be stocks. So what rationale do I have for saying real estate is a worse investment than stocks? Well, one of the reasons why real estate is such a good vehicle to produce wealth long term is number 1, because of the debt. But this is something unique to the United States. The ability to get a 30-year fixed rate mortgage on a piece of real estate is something that you can't do pretty much anywhere in the world except for the United States, which means it's not really part of the real estate that makes it such a good investment. It's the United States laws that makes real estate an artificially good investment. And that's something that could change. The second reason real estate has been such a good investment over the long term is taxes, because you get depreciation. There are a lot of different ways that you can exploit the tax code written by Congress, approved by Congress, given to us by the United States government to incentivize us to invest in real estate. And again, those things could change. If for any reason the United States government does not want to incentivize people to invest in real estate anymore, those incentives could go away. And so the reality is real estate inherently, in and of itself, is not actually the best long-term investment. It still would be a great place to diversify and have some ownership in real estate, even if those incentives were not there. But it would not be the wealth generating tool that it is today without those artificial incentives built in by the United States government. And while it's true that real estate has created more millionaires than any other industry, it has not created many billionaires. That comes from equity, ownership in business, which is why stocks take the number 1 spot on the best long-term investment. The only way to create real large wealth long-term is through business. For most people, that's simply going to be owning stocks. And I understand. Also, for most people, that's just going to be owning the S&P 500, which in my opinion is a worse option than concentrating in real estate. But if you do it right, your ability to create more wealth long-term with stocks is a lot higher than it is with real estate, which is why stocks deserve that #1 spot. Now, just because stocks are in that #1 spot doesn't mean that you should go all in on stocks. You should never concentrate all of your wealth in one area. There should be certain parts of your wealth diversified between different asset classes for different purposes. You should have some savings. You should have some real estate. You should have some stocks. You should have some gold. You should have some Bitcoin. And if you want to know all about the best percentages of your money to keep in those different areas and why and the best ways to do that, I teach all that and more at my Heresy Financial University, linked in the description below. As always, really appreciate you guys. Thanks so much for watching. Have a great day.